Something changed in your payslip this April, and you probably didn't notice it. Text overlay: 4.2 million workers dragged into higher tax since 2021. 4.2 million UK workers have been quietly pushed into paying more tax without a single rate change. The government didn't raise income tax, they just froze the threshold and let your wages do the rest. 0.15100 UK stakes. Here's what that actually means for you. If you're earning anywhere between £25,000 and £45,000, this directly cuts your take-home pay, not in some abstract way, in real money, leaving your account every single month. Text overlay: personal allowance frozen at £12,570 until 2028. The personal allowance, that's the chunk of your income you don't pay tax on, has been stuck at £12,570 since April 2021. It hasn't moved. It won't move until at least 2028. Meanwhile, average UK wages have gone up by roughly 20% in that same period. So your salary grew, your tax-free slice didn't. HMRC is collecting more from you every year, and nobody's calling it anything. That's a £6,000 increase in what you're being taxed on. Quietly, no announcement. 100130 The open loop. Right, there are specific moves you can make right now inside the rules that pull some of that money back. We are talking hundreds, sometimes over £1,000 a year. Money that stays with you instead of going to HMRC. But before I show you the actual numbers, I will show you the actual numbers. You need to understand the second change almost nobody's caught onto, because it affects anyone with a side hustle, a second job, or even a bit of freelance work on the side. And if you get this wrong, HMRC can come back for up to 4 years, sometimes 6. We'll get to that in a moment. 134.00 Data Phase 1. Change 1, the fiscal drag, what it's actually costing you. Let's make this real. Say you earned £32,000 last year and got a 4% pay rise. You're now on £33,280. Sounds like a win. Text overlay: pay rise of £1,280. But how much do you keep? Out of that extra £1,280, you pay 20% income tax on it and 12% national insurance. You keep just £864, less than 70% of your raise. The rest goes straight to HMRC. Now here's what nobody tells you. If you're sitting just below the 40% threshold, which kicks in at £50,000 for most people in 2025/26, a small pay rise can push you over it. And suddenly, you're losing 40% of every extra pound you earn, not 20. That threshold hasn't moved either. It's been frozen at £50,270, and it stays frozen. Change 2, the side hustle rules, DSC7, and the trading allowance trap. This is where it gets interesting. If you do any work outside your main job, selling online, freelancing, Deliveroo, tutoring, renting a room, HMRC now gets a data feed directly from the platform. This started in January 2024 under rules called DSC7. Think about it. If you sold more than £1,732 of goods or services on a platform last year, that data's already at HMRC, they're cross-referencing it now. Text overlay: 1,732 transactions or £1,732 in earnings triggers DSC7 reporting. The trading allowance gives you £1,000 of tax-free income from side activities. That's it, £1,000. Everything above that, you're supposed to declare. Receipt: GOV page showing the £1,000 trading allowance under income from self-employment. Most people don't even know this threshold exists, and the ones who do often think it's per platform. It isn't. It's your total side income across everything combined. 400500 Human Pivot. Look, the numbers aren't why most people mess this up. It's the feeling. You convince yourself it's too complicated, that you'll sort it later, that HMRC won't bother with someone earning 30 grand with a bit of freelance on the side. They will, not because you're a target, but because it's all automated now. DSC7 means the data arrives at HMRC without any human pressing a button. A computer flags the mismatch. A letter gets generated, and suddenly you owe back tax, plus interest, plus a penalty. The people who get hit hardest aren't crooks. They're people who told themselves the rules didn't apply to them, or that the amounts were too small to bother with. 500800 Data Phase 2. How to pull money back legally right now. Here's the payoff: 3 moves, real numbers. Move 1, salary sacrifice. If your employer offers salary sacrifice for pension contributions, and most do, this is the single most effective legal way to reduce what you owe right now. You're not just saving tax, you're avoiding national insurance too. Text overlay: salary sacrifice saves both income tax and national insurance. Here's the maths. You earn £35,000. You sacrifice £3,000 into your pension via salary sacrifice. Your taxable income drops to £32,000. You save £600 in income tax and £360 in NI. That's £960 back. Every year, your pension pot doesn't shrink. Your employer often matches it or adds to it. Move 2, marriage allowance. If you're married or in a civil partnership, and one of you earns under £12,570, you can transfer £1,260 of their unused personal allowance to the higher earner. That saves the higher earner £252 in tax every year. Text overlay: marriage allowance equals up to £252 year tax saving. You can backdate this. 4 tax years. That's potentially over £1,000 in a single claim. You do it in about 10 minutes on GOV. Receipt: GOV marriage allowance claim paid, showing £252 saving and backdating option. Move 3, register for self-assessment, but do it right. If your side income topped £1,000 in the 2024/25 tax year, the deadline to register for self-assessment was the 5th of October 2025. If you missed it, register today. A late registration penalty stings. An investigation for undeclared income destroys you. And here's what most people miss. When you file self-assessment, you can claim expenses against your side income. If you use your phone for work, part of the bill is deductible. Mileage for deliveries, a chunk of your broadband if you freelance from home. These cut into what you owe tax on, sometimes to nothing. 800900 proof plus FCA compliance. The 4.2 million figure comes from the Office for Budget Responsibility. It's in their official March 2024 forecast. The trading allowance details are on GOV under income from self-employment. The DSC7 reporting rules are confirmed in HMRC's own technical guidance, effective from January 2024. Receipt: OBR forecast document cover page, March 2024, with fiscal drag section visible. Now here's the catch. Salary sacrifice reduces your pensionable pay in some schemes. That can affect the size of a defined benefit pension or your mortgage application if the lender checks your P60 salary. It's not a flaw in the strategy. It's something you need to check with your employer and your lender first. The moves I've covered work, but your specific situation, your employer's scheme, how your side income is structured, your mortgage, those details change what's right for you. This video is for educational purposes only and does not constitute financial advice. Always do your own research or speak to an FCA-regulated advisor before making any financial decisions. 9009 30 Shorts Funnel. If the salary sacrifice stuff rang a bell, especially if you've never actually checked whether your employer offers it or how your pension contributions are structured, watch the pension video next. The link is on screen now. I walked through how to read your workplace pension statement and find the salary sacrifice option, which directly changes the numbers we just talked about.